SpaceX needed $75 billion for its IPO. Investors brought $250 billion, nearly 4 times what the company asked for, and suddenly the rest of the tech market ran out of cash. Bitcoin dropped below $62,000 as traders liquidated holdings to chase SpaceX shares. Over $1.7 billion in leveraged crypto positions evaporated in 24 hours. But this wasn't just organic demand outpacing supply. On May 1st, Nasdaq rewrote its own index rules specifically to accommodate SpaceX, waiving the profitability requirement and slashing the waiting period from 90 days to 5. That single rule change turned every passive retirement fund into a forced buyer. Over $30 trillion in 401k and pension money now programmed to purchase SpaceX at whatever price it debuts. Simultaneously, venture capital firms that held SpaceX stock for years are liquidating their entire positions because fund rules require them to return capital to investors once a portfolio company goes public. The easiest way to raise that cash? Sell Bitcoin and tech stocks. What began as the strongest IPO pipeline in a decade, 232 companies raising $41 billion in the first quarter alone, has collapsed into a liquidity crisis. One company grew so large that funding it means starving everything else that was supposed to go public this year. Ether's futures open interest has fallen by 25%, placing significant pressure on the $1,500 support level as traders reduce leverage exposure. The cryptocurrency faces potential further decline to $1,000 if this critical support fails to hold. This leverage reset reflects a broader deleveraging trend in crypto derivatives markets following recent volatility. A break below $1,500 could trigger cascading liquidations and push Ether toward 4-digit territory, erasing gains from earlier rally attempts. This leverage unwinding signals market participants are pulling back risk amid macro uncertainty, reflecting fragility in crypto's institutional adoption layer.